Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Very good morning to you, young Tim.
Good morning.
Bit of a rocky week last week, all round.
Well, it's after an outstanding start to January, start to the year, record highs, etc., 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 especially over in the US. It would appear that investor sentiment turned a little sour towards the end of the week. That being said, we're still, considerably higher than we were 3, 6, 9 months ago in a lot of respects. But the jobless figures in the US on Friday did cause a little bit of a cautionary tale. Potentially wage growth going ahead of expectation.
Yep.
Jobs in the US being gained quicker than they expected. So the propensity for quicker, sooner rate rises in the US caused a little bit of a fright. Furthermore, the read across over to the UK suggests that we may see further rate hikes in the UK, which again is ahead of expectation.
Understood. In terms of week ahead, companies reporting?
To be honest with you, this week I'm not really going to be looking at the company specifics. Obviously, last week you saw the likes of the Capitals, etc., come out and take a real pummeling.
Yep.
This week, I think the macro theme really is going to be very much on the tip of traders' tongues as we see where the market really wants to go. Whether or not we are going to sell off considerably, and this is the start of a real pullback or correction, or whether or not we do see the market sort of gain a bit of buyer's appetite towards the latter part of the week and start to see us push higher. So in terms of company specifics, not really that focused on that. More looking at the macro theme. Again, you've got the dollar 140 handle now, having been up at 143. You could see that break back through that key level.
Yep.
And see further dollar strength. So there's a lot going on the macro theme, which is of more interest to me at the moment.
Okay. Finally, Bitcoin.
Well, again, you saw everyone chomping at the bit just before Christmas, 20,000, et cetera, et cetera, et cetera. Thursday, Friday, latter part of last week, it broke into the 7,000s. So a considerable sell-off. I note in the press this morning that Lloyds have banned anyone taking credit out to buy Bitcoin,
Yep.
which is only sensible. But as I said from the outset, if you can name me an investment bank that got behind Bitcoin from the outset, well done. It's been a retail play. The retail punters have made a lot of money in some respects, but some will be catching a cold right now.
Is it fair that Lloyds Bank tell me that I can't use my money to buy Bitcoin?
In some respects, yes, because it is an incredibly volatile space. And if you are taking credit to gamble, that is irresponsible lending. That being said, if you look at what Lloyds have done and all the other banks over the last 10, 15, 20, 30 years, then you can question their methodology behind it. But at the end of the day, it is their obligation as a lender to make sure that they are lending to individuals and companies in a responsible fashion. Lending to trade Bitcoin is probably not the smartest thing to do.
Tim, brilliant stuff. Thank you very much indeed for your time.